Welcome to the Deep Dive. Today, we're going to dive headfirst into a story that's got everyone talking Kentucky and Bitcoin.
Oh, yeah.
You heard that right?
Right.
Kentucky is making a serious play to become a Bitcoin haven, and we're here to figure out why.
Yeah, it's definitely caught the attention of a lot of people.
It's not every day you see a state embrace something like Bitcoin so wholeheartedly. We've got a fascinating article from KuCoin News titled, Kentucky Senate Unanimously Passes Bill Supporting Bitcoin Self-Custody. And, well, the title kind of says it all.
Yeah.
A unanimous Senate vote. That's huge.
Yeah, it's quite a statement. It passed the House 91-0 earlier, too.
Wow.
That kind of bipartisan support for a topic like this is incredibly rare.
Okay, so let's break this down. We know that Kentucky's legislature is on board, but what exactly does this bill do, and more importantly, why does it matter?
Well, the bill, HB 701, is designed to protect the right to self-custody or Bitcoin and to make Kentucky a hotbed for digital asset mining businesses.
Okay.
But to understand the significance, we need to clarify what self-custody even means.
Right, because that might sound like jargon to some folks.
Yeah, it's actually a pretty simple concept. Self-custody means you have complete control over your Bitcoin, like holding physical cash instead of keeping it in a bank.
Okay.
It's about financial sovereignty and security.
Okay, so if I'm understanding this correctly, Kentucky is saying they want to be a place where people feel safe holding their own Bitcoin without interference. But why is that such a big deal? I mean, why all the fuss about self-custody?
Well, imagine a world where your money could be frozen or confiscated at any time for any reason. Unfortunately, that's a reality for many people around the world who live in countries with unstable governments or restrictive financial systems. Bitcoin offers a way to opt out of that system.
So it's about individual freedom and control over your own assets.
Yeah.
That's pretty powerful stuff.
Absolutely. And if the governor signs this bill, Kentucky could very well become one of the most Bitcoin-friendly states in the U.S., which begs the question, why Kentucky? What's driving this whole Bitcoin embrace?
Yeah, I was just thinking that it seems like a pretty bold move, especially for a state that's not exactly known for being on the cutting edge of tech. Is this purely an economic play?
Well, there are definitely economic factors at play. Attracting Bitcoin-related businesses could bring jobs and investment to the state. Kentucky might be looking to diversify its economy, position itself as a leader in this emerging tech sector.
Right, kind of like a strategic bet on the future of finance.
Exactly. But it's not just about economics. Remember those news snippets we saw on KuCoin about Bitcoin ETF inflows hitting millions?
Oh, yeah.
Institutions are starting to take Bitcoin seriously, and Kentucky might be positioning itself to capitalize on that growing interest.
So they're trying to get ahead of the curve.
Yeah.
Maybe even become a hub for Bitcoin in the U.S.
Yeah.
That's a pretty ambitious goal.
But let's be real, there has to be some pushback, right? I mean, Bitcoin mining's environmental impact is a pretty big concern these days. Are they just ignoring that?
That's a valid point. Bitcoin mining does require a significant amount of energy.
However, there's a growing trend towards using renewable energy sources for mining.
Oh.
Kentucky could potentially capitalize on this by incentivizing miners to use clean energy.
So it's not necessarily a black and white issue. There's a lot of nuance to unpack here. But what about the other potential downsides we hear about, like the volatility of the crypto market?
Volatility is a legitimate concern, no doubt. And then there's the issue of regulatory uncertainty at the federal level.
Yeah.
States like Kentucky are kind of wading into uncharted territory here.
So they're taking a calculated risk, hoping the potential rewards outweigh the risks. It's almost like a case study in how states can adapt to a rapidly changing financial world.
That's right.
But what do you think the chances are that Kentucky will be successful in this?
Well, that's the million-dollar question, isn't it? It really depends on a number of factors.
Yeah.
How effectively they can attract Bitcoin-related businesses, how they handle the environmental concerns, how the federal government ultimately decides to regulate crypto.
Right, so many moving pieces.
A lot of moving pieces.
But let's not get ahead of ourselves. We got to dive into the specifics of this bill before we can really start making predictions. What exactly does this bill say about self-custody? What could it mean for individuals living in Kentucky?
That's where things get really interesting. Let's unpack that after a quick...
Hold on, we don't do breaks here on the deep dive. We go deep, remember. Let's jump right into those specifics. All right, let's delve into the nitty-gritty of HB 701 and what it means for self-custody in Kentucky. Does this bill spell out specific rules for how people can store their Bitcoin?
Well, it's not so much about prescribing storage methods as it is about establishing a fundamental right to self-custody. The bill prevents any government entity in Kentucky from restricting your ability to hold your own Bitcoin.
So no one from the government can come knocking on my door demanding to see my hardware wallet. That's pretty significant.
Exactly. It ensures that individuals have complete control over their assets. This sets a precedent and sends a clear message that Kentucky recognizes Bitcoin as a legitimate form of property deserving legal protection.
So it's not just about practicality. It's about making a statement about how Kentucky views Bitcoin and the whole crypto space. I wonder how other states are going to react to this.
Yeah, it's definitely a bold move that could influence other states considering their own approach to crypto regulation. This kind of legal protection is a major draw for companies involved in Bitcoin mining, trading, or developing related technologies.
It all circles back to Kentucky's ambition to become a Bitcoin hub. Speaking of which, let's shift gears for a moment and talk about the other side of this bill, the support for digital asset mining ventures. What does that actually look like?
Well, Kentucky already has a few things going for it when it comes to Bitcoin mining.
All right.
Relatively low energy costs, a climate that's ideal for keeping those mining rigs cool,
Yeah,
and now a supportive political environment.
right.
This bill aims to solidify that support by potentially offering tax incentives and other benefits to attract miners.
So are they basically rolling out the red carpet for Bitcoin miners despite the environmental concerns surrounding mining?
You're right to bring that up. The energy consumption of Bitcoin mining is a legitimate concern. However, as we mentioned earlier, there's a growing trend toward using renewable energy sources for mining. Kentucky could use this opportunity to incentivize the use of clean energy, making their mining industry more sustainable.
Okay, that makes sense. It seems like they're trying to address the issue at least. But what about those other concerns we discussed? The volatility of the crypto market and the lack of clear federal regulations.
Those are definitely factors that can't be ignored. Kentucky is taking a calculated risk betting on the long-term potential of Bitcoin despite those uncertainties.
It really is a gamble. It makes you wonder if Kentucky is adequately prepared for the potential downsides of embracing Bitcoin so wholeheartedly.
That's a great point. It raises the question of how they plan to mitigate those risks. We haven't seen any specific details about risk management strategies outlined in the bill.
So there are still a lot of unknowns. It's fascinating to see a state like Kentucky taking such a bold step. But let's step back for a moment and look at the bigger picture. What does this move tell us about the evolving relationship between cryptocurrency and governments?
I think it signals a growing recognition that cryptocurrencies, particularly Bitcoin, are here to stay.
Yeah.
Governments are starting to realize they can't just ignore this technology. They have to figure out how to engage with it.
And Kentucky has chosen to engage in a very proactive way, attempting to shape the narrative and position themselves for potential future benefits. This goes beyond Kentucky, though. It speaks to the broader trend of governments and institutions grappling with the rise of cryptocurrencies, trying to find their place in this new financial landscape.
Absolutely. It's a complex and evolving situation.
We've talked about the potential benefits for Kentucky, the risks involved, the message this sends to the world. But what about the people who actually live in Kentucky? How are they reacting to all of this?
That's an important question our source doesn't really touch on. It would be fascinating to know how Kentuckians feel about their state becoming a Bitcoin haven.
Yeah.
Are they excited about the potential economic benefits? Concerned about the risks? Do they even understand what Bitcoin is?
Right. It's one thing for politicians to pass bills, but it's another thing entirely for those changes to actually take root and impact people's lives. It's almost like Kentucky is conducting a real-world experiment.
I agree. And we'll have to wait and see how it all plays out.
I'm curious to see what happens if Kentucky's bet pays off. Could we see other states following suit? Imagine a world where states are competing to attract Bitcoin businesses and users, offering tax breaks, building out crypto-friendly infrastructure. It's almost like a digital gold rush.
That's an interesting thought. We've seen states compete to attract tech companies with similar incentives. It wouldn't be surprising to see the same thing happen with Bitcoin companies.
It's wild to think about the potential ripple effects this could have. Could we see a shift in power dynamics between states and the federal government when it comes to regulating cryptocurrencies?
It's certainly possible. If more states start taking the lead on crypto regulation, it could force the federal government to create a more unified national framework, or it could lead to a patchwork of conflicting state laws, which would create a lot of confusion and uncertainty for businesses operating across state lines.
A lot of uncertainty, for
Yeah.
sure. But that's what makes this whole situation so fascinating. We're witnessing the birth of a new industry, a new financial system.
Yeah.
And we're seeing how governments are trying to adapt to this rapidly changing landscape.
It's a truly historic moment.
Okay, so we've covered a lot of ground here. We've talked about Kentucky's bold move to embrace Bitcoin, the potential benefits and risks, the broader implications for the future of cryptocurrency, the potential for other states to follow their lead.
We've explored the concept of self-custody, the push to attract Bitcoin miners, and even touched on the environmental concerns surrounding Bitcoin mining.
It's been quite a deep dive. But before we wrap up, I want to circle back to something you mentioned earlier, the idea that even if this bill doesn't achieve all of its intended goals, it's still a significant development. You said it was a sign of the times.
Right. Even if this particular bill doesn't revolutionize Kentucky's economy overnight, it's still a sign that the conversation around Bitcoin and cryptocurrencies is changing.
It's a shift in thinking, right? Governments are starting to take this technology seriously, and they're starting to explore ways to engage with it.
Exactly. And Kentucky is taking a pretty bold approach. They're not just dipping their toes in the water, they're diving right in.
They're going all in on Bitcoin.
That's one way to put it.
So what's the big takeaway here for our listeners? What should they be paying attention to as this story unfolds?
I think the key message is this. Kentucky's move, whether you agree with it or not, is a signal that Bitcoin and cryptocurrencies are becoming increasingly mainstream. They're no longer a fringe technology. They're forcing governments and institutions to rethink their approach to finance and technology.
It's like we're watching a new financial system being built in real time.
Precisely. And it's fascinating to see how different players are reacting to it, how they're trying to shape the rules of the game.
So what does this mean for the average person? Should we all be rushing out to buy Bitcoin?
Well, I wouldn't necessarily say that. It's important to do your own research and understand the risks involved before making any investment decisions.
Right, crypto is still a very volatile market. But even if you're not ready to invest, it's still worth paying attention to this space. It's evolving rapidly, and it's likely to have a significant impact on all of our lives in the years to come.
I completely agree. This is a story that's just getting started.
And Kentucky is right at the center of it. Who knows, maybe we'll see other states following their lead. Maybe we'll see a whole new era of state-level crypto innovation.
It's definitely a possibility.
So, dear listeners, keep an eye on Kentucky and maybe start brushing up on your Bitcoin knowledge. You never know when it might come in handy. Thanks for joining us on this deep dive into the world of Bitcoin in Kentucky. Until next time, keep exploring, keep learning, and keep questioning everything.
That's great advice. Stay curious out there, folks.